Okay. No, it's not working. Share screen. I'm not able to click on the share option. Can you check if I have the rights to share the screen? Yeah, okay. Now, yeah, now it's okay. I hope you can see my entire screen now. I'll open my PowerPoint presentation deck. Can you see my presentation on the screen? Can somebody confirm? Thank you so much. So whenever you face any problem with the audio or the video or the slide share, please notify me then and there. Otherwise, I will keep talking because at home they don't allow me to talk. Now that you have allowed me to talk, I'll go non-stop, right? So why IFRS was brought in? Where is the need for IFRS? As we have seen over the last 10 to 15 years time, the entire world has got shrunk into a village. We call it a global village here in Dubai, right? The whole world is now compressed into one world where a person who's sitting in Dubai can invest in a company in Hong Kong, a person sitting in Hong Kong can invest in a company in UK, and a person sitting in UK can invest in shares of a company in US. But guess what happens? Each of them will have a different understanding about how the transactions are recorded and are being presented by these companies. Because the general purpose accounting statements that are being prepared, the financial statements that are prepared, normally used to be prepared as per the generally accepted accounting practices of each country. We had a German gap, we had a French gap, we had a US gap, we had a UK gap, and so on and so forth. Unfortunately, though it is known as gap, literally there was a gap in what was being presented because people could not make sense of what is being presented because they are used to a certain way of accounting certain things in their country while a company in which they have invested which is operating in another geography was reporting differently. So when we have access to different markets and when we can sit here in one place, Mumbai, and invest in companies in the Europe or in the US or Middle East or Far East or wherever in the world, it becomes important for us to get a clear understanding of how the accounting practices are being followed in different parts of the world and how the transactions are being presented. So when we have to make decisions about investing in a company or aligning with a company for strategic reasons, we rely on the general purpose financial statements that are being presented. And since the whole world came together and we had the opportunity to sit in any part of the world and invest in any company anywhere in the world, the need arose for having uniform practices. That uniform practices of how accounting information is presented for the purpose of various people in the society, whether they are investors or suppliers or customers or employees or contractors, is the move that happened from the generally accepted accounting practice of each country to international financial reporting standards. To put things in perspective, because US has always been in the limelight for various good and bad reasons, mostly for bad reasons. As of last week, a very big bank in US, which is 40-year-old bank, fell through, right? Silicon Valley Bank. US is a rule-based accounting system. US GAAP is based on rules and it runs to 30,000 pages because there are rules for everything. whereas IFRS is principle based. There are only 1,800 pages in the IFRS standard. Enron followed the rule of 3% as per the US GAAP, and hence Enron did not consolidate the satellite units that were around the company where all the liabilities were parked. At the end of the day, when Enron collapsed, people said, oh my God, I didn't have sufficient information about this company. Why? Because as per US GAAP, if your investment in another company is less than 3%, you don't have to consolidate. Whereas in IFRS, it has got nothing to do with the percentage of investment. It has got everything to do with the control. If you have control over another organization, once control is established, you consolidate. Okay? Enron would not have escaped the IFRS rule. Daimler-Benz, which had a $1 billion profit as per German GAAP, went to US and they were told to prepare the statements as per the US GAAP. They prepared their statements as per US GAAP and they found that Daimler-Benz had a 1 billion loss. How come 1 billion profit became 1 billion loss? That means $2 billion is missing just on account of preparing your financial statements as per the generally accepted accounting practices of US. So very clearly, gap of any country, whether it is US or Germany or France or anywhere in the world, gap definitely has a gap. People don't really understand because there are certain peculiarities relating to each of those countries and how the accounting practices have been followed. Hence, we need IFRS. I don't know how many of you have read the letter written by Warren Buffett every year to the shareholders of Berkshire Hathaway. 50 years of letters written by the chairman of Berkshire Hathaway, Warren Buffett, have been compiled into a book and it has been published by Harvard Business Review. Because each letter that Warren Buffett writes, in my opinion, is a treatise. Each letter, any finance professional reading that letter written by Warren Buffett will sit up in 90 degrees and say, wow, this is a brilliant way of communicating with the shareholders of the company. Warren Buffett will not write even one line on politics. Warren Buffett will not write one line on any nonsense. But he will describe each of his companies and he will clearly state how the business panned out, what happened in the railroad, what happened in insurance, what happened in other businesses, how did he make money in Heinz. Everything is explained so beautifully, and normally he writes letter of about 20 pages. If you get an opportunity to go through those letters, it will be brilliant for you to get insights on how a chairman of a company should write to the shareholders. And for your consumption, I thought I'll pick the latest letter written by Warren Buffett on the 25th of February 2023. He says Berkshire had a very good year in 2022. Okay. And he says our income was computed as per the generally accepted accounting practices of US. As per the GAAP, his operating income or operating earnings, as he calls it, for Q1 is 5.5. Q2, it is negative 43.8. So Warren Buffett, who's among the top richest men in the world for the last 25 years, who started investing at the age of 14, who along with his partner
FDP.
Sorry,
प्रिंसिपल मैडम ने भेजा था निर्मला मेमोरियल फाउंडेशन वाला.
Sir, can you mute yourself if you are not
हमने ऑलरेडी सुधर कर था सभी ऑप्टेड आउट.
हाँ नहीं लेकिन अच्छा है एक्चुअली अच्छा है.
Can the organizer
मेरे पास
My apologies. I don't know how I went on mute. Somebody muted me, I think. Can you hear me now? Okay. Was I audible before? Should I restart or can I continue? So I can continue. Thank you so much. That's all I wanted to know. So I was talking about Warren Buffett. So he along with his partner Charlie wrote the investment policies of Berkshire Hathaway in 1965. After 57 years, they are still following the same investment policies. And he said recently, he's 92 years old. He said recently, me and Charlie have been revisiting our investment policy year after year, every year, and we find that there is no need to change our investment policies. And that's a kind of a person who's writing saying the gap earnings are 100% misleading when viewed quarterly or even annually. Okay. So what is gap all about? Gap is all about applying rules. How can you apply the same rule for everything? How can you apply one rule in every different situation? IFRS is not rule based, IFRS is principle based. We apply principles. That is why there is a big difference between GAAP and IFRS. What are IFRS? IFRS, simply put, are standards promulgated by the International Accounting Standards Board. It is called IASB. The standards and interpretations issued by the board together constitutes IFRS. There are some standards from the olden era which are called the International Accounting Standards. In short, we call them IAS. They continue, many of them. And then there are the standards which have come in the recent past after 2009, which we call it as International Financial Reporting Standards. And there are interpretations which were issued in the past, which is called SIC interpretation, Standards Interpretation Committee. And there are IFRIC, which has been issued after the IFRS standards came in. So all the four put together, IFRS standards, IAS standards, SIC interpretation, IFRIC interpretation, all the four put together, we call them as IFRS. And I repeat, IFRS does not prescribe any rules whatsoever under any circumstances. It only provides guidance in the form of principles that need to be applied while reporting the financial information of a company. So there is a great advantage in IFRS because IFRS being a universally accepted, universally understood, uniform way of presentation, the greatest advantage is you don't see a company in Germany as a $1 billion profit company, and then the same company for the same period, you don't say it's a $1 billion loss company as per US. Whether it is in US or in Germany or in France or Japan or India, that company's financial statements are prepared in only one way, applying one set of principles. This is the greatest advantage of IFRS. Now I'll talk about the board a little bit because I want to put things in perspective in terms of the background, because I feel as teachers and lecturers and professors, each one of you have the responsibility to put things in perspective for your audience. Your audience should know from where you are coming. That's why I chose to go this route in talking about what IFRS is all about, and then what the board is doing, how the board got constituted, and how they are publishing these standards. There is a process that is there, a very well prescribed process which they follow. From 1973 to 2001, It was called the IASC, International Accounting Standards Committee. And then in 2001, the committee was transformed into a board called the International Accounting Standards Board. IASB came into existence in April of 2001. There is a monitoring board which was created in 2009, which comprises of capital market authorities from across the world. And IFRS Foundation and trustees is made up of 22 members. And the IASB, the International Accounting Standards Board, has 15 members representing different parts of the world. And they set the technical agenda. They are the people who approve the standards. They are the people who bring out the exposure drafts and interpretation wherever an interpretation is required because of some kind of ambiguity that is being seen by the practice on any of the standards. And there is an advisory council. Approximately 40 members are there in the council, which keeps advising the International Accounting Standards Board. And then we have the IFRIC, which is the IFRS Interpretation Committee, which develops interpretative guidance on accounting issues. And there are various working groups that are formed from time to time, which works on specific agenda projects. For example, financial instruments. There is a working group that is working on the financial instruments. There was a working group which worked on the insurance sector and came up with the IFRS 17 standards, which replaced the standard which was earlier there as IFRS 4. So what the board did in 2001, the board adopted all the international accounting standards as they existed, and they said any new standards from 2001 will be called as IFRS and not IAS. So when now we refer to IFRS, we are actually referring not only to the IFRS standards but also the IAS standards, because many of them still continue. We will see a complete list of all the IAS standards that are continuing today and also the IFRS standards that are in use as we speak. How is the standards being set? IASB first establishes an advisory committee, and the committee will give advice to the board on specific issues. And then a discussion paper is developed like a white paper, and then it is circulated for public comment. Following the receipt of the comments, IASB then publishes an exposure draft of the proposed standard, and the exposure draft is left with the public for a long time so that people from different walks of life, different background, different perspectives can take a look at it and give their comments. And then finally, conclusions are drawn from all the feedback that is received from practitioners, from companies, from regulators, from government departments. So all the views, comments, and opinions are considered, and finally the exposure draft gets modified according to those comments, and finally is issued as a standard. And if anybody disagrees on the standards or any part of the standard, this is why part C of the Red Book talks only about the discussions that happened in the IASB. What was the discussion? Which member agreed? Which member disagreed? You have 15 members. Not all 15 members are going to agree on everything. Some of them might dissent. Some of them might have difference of opinion. Those are all recorded. And finally, the board decides to go ahead and publish the standard. So when the standard is being published, you will see the standard in part A of the red book. The examples and illustrations you will see in part B, and then you will see the discussion that happened in the board and what are those dissenting opinions that were expressed by some of the members before the standard was adopted by the. That's why most of the standards are not adopted unanimously. They are adopted on majority vote because always on some sections of the standard, some people might have a difference of opinion, but those are all recorded. It is there in part C. That's why if you go to a bookstore and say, I want IFRS red book, they will give you 3 volumes. Many people wonder why 3 volumes are being given. Part A is the standards as promulgated by the board. Part B will have all the examples and illustrations, and part C will have the discussions. So together they are called the IFRS standard. Of course, part A is what is relevant, and that is about 1,800 pages roughly. In terms of adoption, this is a question that I get always asked, sir, is it being adopted everywhere? Yeah, mostly it is adopted. We can say more or less across the world, IFRS has been adopted. For example, in India, we have IND AS. IND AS is mostly aligned with IFRS. I would say 90% replica you will see in each of them. 90% of the IFRS standards are there in the IND IAS. You are going to have a separate discussion on that, so I don't want to dwell upon it now. But the point I'm making is in India, IFRS has not been adopted because we have the IND AS, but the IND AS reflects more or less 90% of IFRS. As far as US is concerned, US has allowed adoption of IFRS. At the same time, US also has the US GAAP. For example, if Infosys is listed in American Stock Exchange, then Infosys is free to prepare their financial statements as per IFRS and present it. Earlier, there was a need for reconciliation between the IFRS and GAAP, US GAAP. Now, even that reconciliation need not be prepared. You can just simply file your IFRS statements, and there is no need for you to reconcile them with the US GAAP. So you can say that in the Americas, quite a lot of jurisdictions have adopted. Europe, I would say more or less it is complete. The whole of Europe has adopted IFRS. Most of America has adopted IFRS. And in the Asia region, except India and China, I would say majority of the jurisdictions have adopted IFRS. Africa, I would say the whole of Africa has adopted IFRS, and the whole of Middle East has adopted IFRS. So you can say broadly about a big chunk of the world has adopted IFRS, except I would say in summary, 3 main jurisdictions, which is China, US, which is North America, and India. These are the 3. But what happens every time a new standard is being discussed, the IASB is sending the same to the US, and they are seeing how they can align with the American standard when they publish their standard. So more or less the convergence is taking place, and I feel it's a matter of time that probably in the next few years' time, the whole world will adopt into IFRS, and the whole world will have one way of presenting the financial information. So what is the definition of IFRS? IFRS 1, which is a standard for first-time adoption of international financial reporting standards, defines IFRS as all the standards and interpretations adopted and issued by the IASB, which means IAS standards, IFRS standards, SICs, and IFRICs. SIC stands for the Standard Interpretation Committee, which was there in the previous regime, and IFRIC stands for the International Financial Reporting Interpretations Committee, which is after IFRS got released as standards. So the IASB refers to the collective set as IFRS standards. And one has to remember, since there are multiple standards, as we speak, there are 41 standards which are there. Okay. So since there are multiple standards, one has to remember, I mentioned that there as a separate line in my presentation slide, all of the individual requirements have equal authority. This is the beauty of IFRS. None of the promulgations, none of the standards or sections or paragraphs of any standard will have a supervening power over something else that has been stated elsewhere, unless it is specifically clearly mentioned in that particular standard. Now, what are the resources? So I gave you the background of what IFRS is all about. Where is the need for IFRS? What is IFRS? How standards are getting developed and how standards are getting promulgated. Now I want to talk for the next few minutes on the resources. What are the important resources? To me, one has to look at the Red Book, IFRS.org, which is the IASB website. If you go there, you will find Blue Book as well as Red Book. Blue Book actually has all the standards of the past as well as what is in currency. But Red Book will have only the standards that are right now in vogue. So I would rather refer to the Red Book as a source. Every year, Red Book is being published and it's available for sale on the website itself, or you can go to any bookstore. You will find the Red Book. The Red Book has all the standards and interpretations that would apply to an entity, and it would contain only the current standards. For example, if you buy the 2022 Red Book from IASB or IFRS.org, you will find that IFRS 4 is missing. Why IFRS 4 is missing in Red Book of 2022 is because IFRS 4 has been replaced by IFRS 17. Improvements were made in the insurance standards, and we have a new standard called 17, which has replaced 4. That's why 4 will be missing from the Red Book. And this is a very, very crucial slide, in my opinion, for all the educators who are here assembled today. The Red Book has Part A, Part B, and Part C. Part A is the standard and the conceptual framework. Part B is a guidance for application of the standard. That's why I said it will have some examples and illustrations. And Part C is how the conclusions were drawn by the IASB, and in the board, what were the deliberations, which member agreed on which paragraph and which member had serious reservations and why and what those reservations are. So from an educator's point of view, if you are a teacher or a lecturer or a professor in an educational institution, I would reckon that reading all the parts, 3 parts, will be very, very important, even though it is a Herculean task, but it is worth doing it. I keep reading them on regular intervals and I discover something new. It's like listening to a song. And each time you listen to the song, you pick up a different note and a different sound, because your mind is tuned towards something. You focus on the string section, and the next time when you listen to that song, probably you are not focused on the string section, so you get some other impact. So like listening to music, reading standards gives you different perspectives each time you read. And the beauty is, each time you read the standard, you see a new dimension, because business is changing. The way business is done is changing. And hence the standards are also constantly going through an update. So for an educator I would say reading all the three parts are important, but most relevant part where we have to read thoroughly, line by line, word by word, will be part A. You have to digest the part A fully and then decide which paragraph of that standard you are going to highlight when you are talking in your classroom. You can't repeat all the paragraphs in the standard, and there is no need also, because many of them are in the form of explanatory note for the standard. So you need to get into that art of developing the PowerPoint presentation where only the crux of the standard is picked and explained in the class. We will come to that in a short while from now. I am going to talk specifically on what I do and what has worked for me, because I've also learned and evolved over a period of time. It's a journey that I'm going through from 1988, and slowly I'm also learning from the feedback of the audience and the way they ask questions. So part A, I would say an educator has to read fully. Part B and C, if you can read it, well and good. And if you go to the ifrs.org, there are some teaching material that is available for every standard. You could pick up those teaching materials also. Not every standard, I would say many of them. Many of the tricky standards like IFRS 9, IFRS 15, 16, 17, these standards, you will definitely find some teaching material in the teaching resources section of ifrs.org. And for an educator who's teaching IFRS, it is extremely important to become a member of ifrs.org. They only charge about, I think, 240 or 250 British pounds per annum to be a member. It would be worthwhile to pay, because you will have unbounded access to everything in ifrs.org. So the first most important resource for an educator or a student is ifrs.org. The second resource, in my opinion, which I have found very, very useful is IAS Plus. Actually, iasplus.com is a website that is run by Deloitte, and it's updated on a regular basis. I would say it's updated on a daily basis, and there is a team that is working on it from Deloitte. And IAS Plus, I find, for each of the standards is a very good resource. And Deloitte also comes up with a very, very useful pocket diary. I don't know how many of you have seen it. I love that pocket diary because it actually fits into your pocket, literally. And of course, now we are in the WhatsApp world, so nobody carries that pocket diary, but it's typically a pocket diary which will fit into your pocket. And the beauty of Deloitte's IFRS in your pocket is every single standard is compressed into a capsule form. And mostly, I would say, majority of the standards fit into about a page or two, except some standards like IFRS 9 and 16, which runs to more than 3 pages. Normally, it is a page or two. And it's a brilliant piece of work done by Deloitte, and nobody else does it, because Deloitte does it perfectly well. And I've been going through the pocket diary for a long time now. Every year they publish it, and it's available in open source. If you just go to Google and say Deloitte IFRS in your pocket 2022, you will get a PDF which you can download. It has a background, how the board was constituted, who are the members, the number of members, how standards are being issued, country by country. For all the 240 odd countries, it will show you the adoption and the requirement of the local law in terms of IFRS adoption. And then it talks about each of the standards, IAS, IFRS, and then the interpretations, because there are 20 interpretations as we speak, 41 standards as we speak. So 41 plus 20, all the 61 together, which we call as IFRS, is presented to you in the pocket diary in about 70 pages. So for a serious reader, it's about 1 hour's task. Just you can go through and then you get a glimpse of everything. And then specific standards you want to pick and gain deeper insights, you can go to the red book. So IFRS in your pocket for an educator, in my opinion, is very useful because that will help you to put together your presentation deck. And some illustrations. People like graphics, right? People don't like to see a PowerPoint presentation like what I am showing you. They like to see some graphics, they like to see some pictures, and they like to see some cartoon there with some illustration. I find the CPD box is a very, very interesting website. It is run by a finance professional. She does a very good job. And she used to run another website called IFRS Box. And she rechristened the IFRS box into CPD box for whatever reason. I find the illustrations there for some of the concepts is very, very nicely done. Those infographics to me are very useful, very interesting, highly illustrative, and captures the entire essence of the standard very beautifully. So in my reckoning, if you are an educator and you want to focus on learning IFRS, updating your knowledge on IFRS, sharing your knowledge on IFRS in a classroom, and then coming back and refreshing your own understanding and reading, I would definitely say that all these four will prove to be extremely important resources. IFRS.org, IASplus.com, Pocket Diary of Deloitte, which is being published every year. I have still not seen the 2023. I'm hoping it will come out very soon. And then the cpdbox.com for some infographics, some videos, and nice illustrations. So, what is the latest development? I would say for an educator, this should form part of the starting point. Because when we are meeting an audience which knows about the standard but is keen to know what has changed, it's important to have that as the starting point. So I would say it's good to see from the ifrs.org the new requirements that are there and pick that up. For example, I picked this from ifrs.org. What is new? As of 1st of January 2023, we have IFRS 17 for insurance. And then what is new? What are the latest developments? We have some amendments. There are some amendments in IAS 1. There are some, whenever one amendments come, I always see 8 and 12, or 8 also gets amended because 8 talks about accounting, policies and estimates, right? So there are some amendments that have come in IAS 1, IAS 8, and IAS 12. These are the latest. One has to keep looking because I find that what you saw as new development in Jan will change by about March or April, and again changes by about June or July, and similarly around September, October. I would say likely in once in a quarter that we find some changes that are occurring. So it's good to go to ifrs.org, in my opinion, as a monthly exercise. At the beginning of every month, it is good to go there and see what are the latest developments and keep updating your knowledge on those latest developments so that you can carry it into the classroom. The list of standards, I'm just going to go through the list of standards mainly to emphasize on certain standards that in my opinion are common to all the companies, but there are standards which are not applicable to every single company, right? So in IAS, we have 25 standards which are right now in vogue. IAS 1 is a very, very important standard. And 7, 8, 10, extremely important standard. 16, again, a very important standard, property, plant, and equipment. And standards like IAS 20, which is for government grants and disclosure of government assistance, may not be applicable to every single company. So, where it is applicable, yes, of course, we need to look at that standard. Similarly, effects on foreign exchange may not be applicable to every company, because if that company is a single country, single product company, and they don't deal in multiple currencies, then it will not be required. And similarly, retirement benefit plans. If the retirement benefit plan has been set up, then it is fine. If it is not set up by the company for whatever reason, required or not required by the regulatory requirements, we have to decide, we have to take a call. So separate financial statements will be required where there is a need for consolidation and the consolidation is not done. So that means if it is not a group entity, if it is a standalone entity which doesn't control any other entity across the globe, then you may not be required to apply IAS 27. But so, for example, interim financial statements IAS 34 will not be required for a non-listed company. It is required only for a listed company. So what we have to do is we'll have to form a kind of a list in our mind, and when we go to address an audience, if we know that that audience is not interested in some of these standards, we need not include them in the agenda for discussion. We'll have to be very, very careful. For example, IAS 16, property, plant and equipment, IAS 36, impairment of assets, IAS 38, intangible assets, I would say, and of course, IAS 40, investment property, I would say it will be applicable for almost every single company. And then you link it with IFRS 5. IFRS 5 is about assets held for sale and discontinued operations. So what one has to do is one should get a very high level view of these standards and see that okay, there are 25 IAS standards, there are 16 IFRS standards. So this 16 plus 25, totally there are 41 standards. How to link these standards and how to sequence them? For example, if you see IFRS 1 is first time adoption. I would never teach first time adoption on my first class. You may wonder how come first time adoption is not taught on the first day? Because for a first time adoption of IFRS, and understanding of various standards is very, very critical. So first time adoption of IFRS, even though it is IFRS number 1, standard number 1, I would always deal with it on the last day. This is something I learned from my experience. In 2009-10, I was talking about IFRS 1 and people were seeing stars. Then I realized I'm making a mistake. 2010, I started talking about IFRS 1 as the last subject. And people could relate to things, people could understand. So one has to get familiar with the list of standards, get an understanding of each of those standards and where and to whom it is applicable. And then based on the comprehensive understanding of the list of standards, whether it is IAS or IFRS, then decide how the standards will get combined. For example, 16, 23, 36, 38, 40, and IFRS 5. To me, that is one group. Has to be dealt with together because there is some interlinks between them. So when you talk of property, plant and equipment, you have to talk of impairment of assets. When you talk of property, plant and equipment and impairment of assets, you have to talk about intangible assets as well, 38, investment property as well, 40, assets held for sale, IFRS 5. So they come together. For example, if you are talking about consolidation, I love to bring in IFRS 3, which is business combination, IFRS 10, consolidated statements, IAS 27, which is separate financial statements, IAS 28, which is investment in associates, and then IFRS 11, which is joint arrangements, and then finally 12, which is disclosure of interest in other entities. That will come like a family of standards which have to be discussed together, if not on the same day, but always better it is discussed together. So the standards are there from 1 to 17 in IFRS, 1 to 41 in IAS. You will find many numbers are missing because they are no longer relevant, or probably they have been replaced by IFRS. So if you have this comprehensive list in front of you, and then you know what the audience is actually looking for, who are part of your audience and what they need, and then we can cull out the standards that are relevant for the audience. Having culled out the relevant standards, then we do the grouping of the standards to form the different families, and then specifically take one by one and show the interlink between those standards and explain it to the audience. That way, what happens is we don't do a back and forth. On day one, we don't talk about one of the standards and come and talk about it on day three. The connectivity is lost. So if you group them together and if you talk about them together on one day or continuously over a few days, the audience stays connected. And every time when there is a gap between the first class and the second class, I always follow what I was taught in Harvard Business School: review and registration. First 5 minutes, they do the review and they do the recollection of whatever was spoken the previous class. That's called the review and registration process in psychology. So it gets registered in their mind very clearly, and then they are on to the subject. Continuity is established, and then you go bang on to the subject in the next class. So there are interpretations which are there. I think by mistake I didn't delete the IFRS 17 in this slide. It should be only SIC. That is what I intended. There are 5 SICs which are interpretations to clarify if at all there is any ambiguity in the standard, and there are 15 IFRICs. So totally there are 20 interpretations that have been published by the International Accounting Standards Board so far. What is the content? Generally, a standard contains only 9 things. The objective of the standard is very clear. What is the objective of the standard? This will be stated in every single standard as the first paragraph. The second paragraph will talk about the scope of the standard, to whom it applies, to whom it does not apply, under what circumstances. Very, very clear. That list is very comprehensive list as to whom it applies and under what circumstances, to whom it doesn't apply, under what circumstances. Then the next paragraph is the definitions in IAS. In IFRS, definitions will be at the end, fag end of it. And then there are fundamental concepts. These are extremely important from an educator's point of view to highlight to the audience that these are the fundamental concepts that one has to be clear on this particular standard. For example, we were talking about IAS 16 on property, plant and equipment. So if I talk about property, plant and equipment, I love to make it very, very clear that the cost of the asset, how do you ascertain the cost of the asset? That's very, very important. When you come to asset held for sale under IFRS 5, there is a fundamental concept relating to when you can charge depreciation and when you should stop charging depreciation. To come to IFRS 9, ECL is very, very important. How to look at the loss which is occurring due to a forecasted inability of somebody to pay, or your own difficulty in realizing the money that you have invested. So these are the fundamental concepts that have to be explained right at the beginning of the session. And then we say how transactions will be recognized. For example, IS 32 says when a contract is entered into, the transaction has to be recognized. That's all. We don't wait for the actual delivery. I have a forward contract today. If I have a forward contract for 6 months and the contract is going to be executed at the end of the 6 months for delivery, but still, since I entered into a contract today, it gives rise to a financial asset and a financial liability which has to be recognized in my books. So when does a transaction get recognized? Having recognized that transaction, how do you measure it going forward? Every time you prepare the financial statements, whether it is done at the end of the year or on a quarterly basis as interim accounts as required by IAS 34, how do you measure those assets and liabilities? And then comes the presentation. Every standard talks about presentation. How should you present it? Where it has to be presented? Yeah, it has to be presented as a current liability. When? If it is a long-term liability, still the next 12 months installment has to be shown as current liability. This is all there in the standard. Presentation is very, very important. How much of it will be shown as non-current liability? How much of it will be shown as current liability? Under what circumstances? On what basis? What is the principle here? The principle here is current liability is something which has to be extinguished within the next 12 months from the date of balance sheet. So if I have a long-term liability in which there are next 12 months installments to be paid, obviously it should be brought in as current liability in terms of presentation. That's why every standard talks about presentation. That has to be taken out and highlighted. Then comes disclosure. As far as disclosure is concerned, almost every standard has disclosure requirements spelled out. And there are two standards which are meant for disclosure. IAS 7, meant for disclosure of financial instruments. IFRS 7. IFRS 7 is meant for only disclosure. IFRS 12 meant for only disclosure. So there are two standards which are focused on disclosure. One is focused on disclosure of financial instruments. Another is focused on disclosure on investment in different entities. But predominantly you will find disclosure requirements being spelled out in every single standard. And then for each of the standards, there might be some relevant interpretation, which is either SIC or IFRIC. We have to connect it to that standard. The understanding of the standard is complete only with the interpretation. So how do we understand a standard and how do we make our audience understand the standard? We divide it into 9 sections. For every standard, you should have a minimum 9-slide presentation deck. Preferably one more, which is the 10th one, where I also show some examples. I pick up some illustrations from the real world. I pick up, like you saw me bringing the Berkshire Hathaway letter written by Warren Buffett on 25th of February. We are on the 17th of March. It's hardly 3 weeks old, right? Bring some latest information from the published statements, financial statements of companies, put them there on the slide deck, and then allow for discussion with the audience, because they may have a different perspective, you may have a different perspective. There's nothing wrong about it, but it is good to have a deliberation and then decide when to stop the discussion or the deliberation. There is no point in arguing till cows come home. So we draw a line and say, yalla, we will move to the next topic now. So I always bring the illustration. Sometimes what I do under the relevant section, maybe under fundamental concepts, maybe under recognition, maybe under presentation or disclosure, I insert a case study saying ABC Limited wants to do this. What do you think? Is it right to present it like this? And they have already presented like this. So some simulated cases for people to get a very clear understanding, and some illustrative examples of published accounts, so that the learning from the standard is linked to some illustrative examples or simulated cases, and also connected to the real world example of how it is being published by some of the companies around us which are following the IFRS. So this is what one should do. Some tips from me based on my little experience. I'm not a very experienced person, but I've been teaching standards from 1988. So whatever little experience I've gained, I'm still a student, I'm not a teacher. The little experience that I have gained is, we as educators should have a very, very clear understanding and know exactly what are the requirements of the standard. Why there is a standard on provisioning, why there is a standard on impairment of assets, why there is a standard on financial instruments. And then see if we can pick any of the examples. A part B of Red Book, let me tell you, has got fantastic examples. Fantastic. You don't have to look anywhere else in the world for examples. Part B has got some very good illustrative examples. And then pull, as I said, live reports, annual reports of companies, listed companies is available in the public domain. Doesn't cost you anything other than your time. Of course, time is very precious. I spend a lot of time researching on companies and pulling information by reading their annual reports and understanding what they are doing. And then bring up these live examples and your own experiences in the form of deliberations in the class, or push a short quiz. This is what the company is doing, right or wrong. If you say right, yeah, on what basis? Then somebody will say, sir, you told me that under paragraph 19 in IAS 1, there is an exception that is allowed. So I'm applying the exception that is permitted by the standard under paragraph 19. That's a way, our understanding and the audience's understanding gets solidified. And talk about the recent developments. For example, if SVB failed and SVB had a problem in terms of liquidity, and there was a run over the bank last weekend, $40 billion got withdrawn from the bank. What's the background to it, and what could have gone wrong in terms of reporting, right? And you have to effectively use the definitions, because some of these definitions are great definitions, very well coined, very well articulated. Whoever did a fantastic job, in my opinion. So we need to draw those definitions and then go in detail. For example, IFRS 13, right, talks about fair value measurement. What is fair value? Beautiful definition. Such beautiful definition. I split that sentence into key words, and then I talk about each of those key words, and I say, who is a market participant? Why the definition is talking about market participant. So we have to bring that comprehensive knowledge to the classroom, so that people understand and appreciate, and then they will start thinking. When they start thinking, then they will be able to link to different standards. For example, everywhere when it comes to fair value, IFRS 13 is being used, but not in IFRS 16. So they will be able to see the link. They'll say, yeah, I saw fair value as per IFRS 13 everywhere, but not in IFRS 16. Why? What is so different in IFRS 16? That probing question should come up on its own in the mind of the student. And most important, I would never ever recommend reading anything between the lines. I don't like the idea of reading between the lines. I don't like the idea of drawing some inferences and our own opinion based on what has been drafted and published. If there is an ambiguity in understanding, there will be an interpretation available for it. And if there is an ambiguity in your mind while you read it and you tried to understanding, it's better to put things in perspective by looking at published statements of companies or by talking to somebody who's an industry expert, who's working in the finance side and preparing the financial statements and presenting it at a CFO level or whoever is an auditor of that company. I would never try to form my own opinions or inferences. I would never draw anything from in between the lines. To me, between the two lines, there is only white space, nothing else. And I don't know what that white space is. And whenever there is a doubt on any standard, I have seen from my little experience, when you go back and read again and again, again and again, 3, 4, 5 times, you get that clarity. So when in doubt, just go back to basics. Look at the definition, look at the standard, look at the structuring of the standard, look at what are the requirements of the standard, go back and check the scope of the standard, go back and read the objective. There is an objective behind that standard. What is the objective? And wherever teaching material or guideline is available in IFRS.org, I would strongly recommend go and use it. Copy it. If you're an educator, you are allowed to copy those images or the slides. Copy it into your presentation. Nothing wrong. Bring it from the IFRS.org because to me, that's a most authentic piece of information for solidifying our knowledge. And always link the interpretation. There are 20 interpretations, but there are 41 standards. That means not every standard has an interpretation. Very simple. So try to link the interpretation to the standard. When you finish discussing the standard, bring about the interpretation and talk about it. And as far as possible, I saw a resource which is available in public domain. I can share it with all of you, no problem. And somebody from Pakistan did a fantastic job of capturing every standard into a one pager. Beautifully done. I'll show you some example now. Beautifully done. And that summarization, if a person wants to gain thorough knowledge, the pocket diary of Deloitte and the one-page illustrative pictorial representation of the standard in the form of a flowchart or a diagram is a fantastic way of getting into the standards. And then for specific areas, you can go and read part A. And then to get a better understanding, look at the illustrative examples in part B. Right? So, for example, I said you can pull from IFRS.org. So, when we had this COVID situation, IFRS.org published a working note on going concern. This is something which is there in the IFRS.org. I just captured it as a screenshot and I use it in my presentations. There is nothing wrong when we talk about going concern. What are the different scenarios? Based on those scenarios, are you going to prepare your financial statements under the going concern assumption or not? And what kind of disclosure that you are required to make under each of those scenarios? This is given in IFRS.org. I didn't prepare it. Somebody prepared it in the board, and that's very useful. And it is part of the teaching material that is available in ifrs.org. So I just simply took a copy of it and I've got it in my presentation deck. Similarly, what are the effects of the climate related matters? Because the whole world is talking about climate. As of November 2022, a $2 billion company called Patagonia, owned by a family, transferred the entire company to a public trust called the Climate Trust. And the owner said this trust will receive as dividend at least $100 million. And instead of going public as a family business, I thought I should go purpose. Patagonia in November 22 has gone purpose by transferring the entire company to a public trust called Climate Trust. What is the job of the trust? Use the $100 million dividend income to protect Mother Earth. Sustainability reports are being presented by companies. The 17 goals set by UN, people are adopting 2 or 3 and they are highlighting in their annual report, and they are talking about it by saying, this is what we are doing to give clean water. This is what we are doing to educate everybody. This is what we are doing in terms of sanitation and cleanliness or whatever, health. So how are we to deal with effects of climate related matters? This is again there in ifrs.org. What should companies do while applying these standards? What is to be considered as material when there is a climatic change that is occurring for your business, because you are giving projections into the future and talking about the outlook, economic outlook, and so on and so forth in your published financial statements and notes. So I spoke about the CPD box or the IFRS box. Okay. I like this kind of infographics. This is what I meant when I said you can go there and pull some of this. For example, for IFRS 15, we talk about a 5-step model for revenue recognition. How do we do that? We can explain, but pictorially, when it is put on the screen and when it is visible for the audience get excited. They see, step 1, step 2, step 3, step 4, step 5. I can recognize revenue only when I satisfy the performance obligation under the contract, because the name of the standard itself, IFRS 15, is revenue from contracts with customers. With every customer, on every occasion, I have a contract, not a written document, but an understanding. Then what is that contract? That contract forces certain obligations on me. Have I fulfilled those obligations? If not, when do I fulfill? The point at which I fulfill, am I to recognize revenue, or over a period of time, can I recognize revenue? Because there are 2 methods that are prescribed. All this gets clearly understood by the audience when we put 2 pictures in front of them or 2 infographics in front of them. That's why I picked this from the CPD box, because I spoke about it and said you can pull a lot of these infographics or diagrams, which are very useful in my opinion, particularly for an educator. See, we know the subject and we know how to convey the subject, but many times we don't have the time to put together a nice presentation deck. I started teaching in the Institute of Chartered Accountants of India way back in 1988 by using a overhead projector and writing everything on a transparency and then going and placing it on the glass. Those days are all gone. Now, where is the time for us to write everything on a transparency or a sheet of paper? And how can we project it on a wall? So now it's good to go into the internet and make a disclaimer in your first slide saying the inputs have been taken from public source. Fine. What is wrong in it? There is nothing wrong. I pull a lot of these pictures. I pull a lot of these infographics from public domain, which is very, very useful, because a picture can convey much more than the words written on the screen or words spoken. That's why these are very powerful. And even what is new in terms of standards is available in IFRS.org. What you see in front on the screen is picked up from IFRS.org. I didn't develop it. I saw this was very beautifully done. Okay, we had off balance sheet items in IAS 17. Now IAS 17 is gone, replaced by IFRS 16. What happens in IFRS 16? Everything comes into the balance sheet. Right to use is an asset to be disclosed. It was sitting in notes on accounts. Now it is sitting inside the statement of the company. So this makes things very clear and very easy for the audience. So this is why in my presentation on IFRS 16, I have this. From where I got it from IFRS.org. It's available there in one of the guidance notes issued. I take a screenshot and then I convert it into a picture. I paste it into my PowerPoint presentation. Job done in 5 minutes. If I have to create something like this, it will take 30 minutes. Right? This is the one pager that I was talking about, which was very nicely developed by somebody, a chartered accountant from Pakistan. Very beautifully done, in my opinion. So, conceptual framework. He has brought the entire conceptual framework in one sheet. Of course, IFRS 9, he has got 3 sheets. I think 15, he has got 2 sheets. IFRS 16, he has got 3 sheets. Those are all not possible to fit into one sheet. Wherever possible, he has fitted them into one sheet. So to me, the Deloitte's pocket diary and this one-page illustration of what is there in the standard is very useful to get the crux of it, because if you have a time constraint and if you have to talk about the standard in less than 45 minutes, then this is what you should talk to the audience, in my opinion. Right? IAS 1, for example, yes, beautifully captured. What are the overall considerations? Okay, in the statement of financial position, what is the structure and what should be the content? In the statement of profit or loss and other comprehensive income, what should be shown? What is other comprehensive income? Definition. And then statement of cash flow, statement of changes in equity, notes on accounts. All these 5 put together is the components of the financial statements, beautifully illustrated and presented in a very simple flow chart. This is very nice, in my opinion, very beautifully done, in my opinion. And for educators like you, I would say this is a very useful kind of resource. Instead of putting there multiple paragraphs from the standard and filling probably 18 slides, it's good to put them all in just one slide. You leave this one slide and I can talk on this slide for next 30 minutes. No problem. So this is a very powerful way of presenting your understanding of the standard for the understanding of the audience, so that we get into a dialogue and try to improve our understanding. Because after all these years, I still feel that I know only 5% of the IFRS. I don't know still 95% of it, because I am not a practitioner. I don't practice as a auditor, or I don't work in an organization preparing the financial statements on a quarterly basis by applying IFRS. So since I am not on that practical side, I still regret that my knowledge is only 5%. So when we do this kind of an exercise, this is where our knowledge becomes far greater. So I would stop here, and I will open the forum for questions. We have 30 minutes, and I'm sure there will be a lot of questions from the audience. So we can discuss on the teaching methodologies, or on the resources, or why and what of some of the things that I have explained over the last 1 hour and 20 minutes. So we'll keep the remaining time for question and answer. I request the webmaster or the organizers to handle the questions. And if you want me to stop the presentation deck, I can stop sharing the screen. Is there anything on the chat box? Can you see? Because I'm not able to see the chat box in my view. I see only my own slide presentation. I can't see the chat box. We have 65 people in the room. That means there should be at least 75 questions. And we have none so far. Any questions, my dear friends?
Yes, sir. Good afternoon, sir.
Yes, good afternoon.
Sir, I am a teacher, and I would like to inform the organizers that the chat is not enabled. It is only for the members it shows. We cannot type anything. But I'll ask my question, sir.
Yeah.
Sir, I am teaching at undergraduate level. So
Okay.
at undergraduate level, teaching all the IFRS standards or the IAS standards would not be possible. So which one
Not
are the
required. Not
basic
required.
ones?
See, you should talk about IAS 1, which is presentation of financial statements. Then you should talk about IAS 2, inventory, IAS 7, cash flows, 8, accounting estimates and accounting policies, and then 10, events after the balance sheet date. Then go to 16. From 16, you can go straight to 36, impairment of assets. No need to cover IAS 19, employee benefits. No need to cover 20, government grants. No need to talk about income taxes, 12. So you can leave out all the 21, 23 also you can leave out borrowing cost and all that. Then you can then move to IFRS side, and then in IFRS you can just focus on a few standards like consolidation, how consolidation is done, right? Income, how the income is recognized, how revenue is recognized under 15. And of course, little bit on the lease, because lease is also very complicated for the undergrad level. And financial statements, or sorry, financial instruments in IFRS 9, I would rather like to cover IAS 32, which talks about the presentation of the financial assets and liabilities and how a financial liability is distinguished from the equity, and then go to IFRS 9 and then give a brief glimpse of it. That's more than enough at undergrad level. And at undergrad level, it is also good to show them some of the published accounts of good companies around the world. You can't expose them to all the standards, because all the standards will not be relevant for them. Hyperinflationary economy, exploration of natural resources. I don't think these standards will make any sense at a undergrad level.
Yes, sir. Thank you so much for the insight, sir.
Maybe you can enable the chat. This teacher just now told us that the chat is not enabled. Maybe people prefer to type on the chat box because they are talking in the class. They are already tired. Maybe you have better rights as an organizer. They may not have rights like you.
Hello.
Yes, sir.
Hello. Very good afternoon, sir.
Very good afternoon.
Yeah, I'm working as an associate professor in MBA department, sir.
Okay.
I am from Andhra Pradesh. My doubt is, sir, how can you differentiate financial liability with equity? Just now you told us, sir, like some standard. If it is possible,
Yes.
can you brief it, sir?
Yeah. If a transaction leads to creation of a right in favor of the person where he will get the money back and he will also get a fixed return on the money that has been invested, it is clearly a liability. Equity is known by its characteristic called residual recipient. A equity shareholder is a residual recipient. What is residual? Something that is left at the bottom of the pot. What is left at the bottom of the pot is what the equity shareholder will get. That means if the company is being wound up, the last person to be paid out of the company's assets will be the equity shareholder. So equity shareholder is characterized by being the residual recipient of the company, whereas a person who's holder of a debt instrument is characterized by the right that is established in his favor to not only get the money back, but also get some return on it, which we call it as interest, which we call it as the coupon or the coupon rate. So he is entitled to a fixed percentage of return and he is entitled to get his money back in 3 years, 5 years, monthly, whatever. Whereas in the case of a equity instrument, he does not have a right to get the money back until the company is wound up. There is one more circumstance where we pay the money back to the equity shareholders when there is a capital reduction, which is approved by the High Court, and then we go through the capital reduction for which we do the buyback of shares. Unless there is buyback of shares or unless there is a liquidation of the company or winding up procedures on the company, there's no way he is going to get his money back. That is what a equity shareholder is. So what the standard prescribes is, if it is an instrument which is a compounded instrument, we call it as convertible debenture. What is a convertible debenture? It is in the form of a debt, but it ultimately takes a form of equity over a period of time because that person doesn't have confidence in my management. So he says, I'll give you as a loan. Let me watch you for 5 years whether you manage the company well or not. At the end of the 5 years, if I'm really convinced about yourself and your management style, I'll convert it into equity. Today, I'm not willing to give it as equity. So what happens in a convertible instrument? The standard says identify the liability part, evaluate the liability part and show it as a liability. Whatever is the residual amount has to be shown as equity. This is in IS 32.
Okay, sir. Thank you.
Thank you.
Hello.
Yes, sir.
Yeah, this is Dr. Chandrasekhar Devre from Hinduja College. First of all, sir, let me thank you for an excellent session. Not only content-wise, but because we are teachers, we found it very helpful that how to reach our students and make it understand to them. So my question, in fact, partially you have already answered that. Uh, Sir, nowadays most of us are associated with some kind of board of studies and with most of the autonomous colleges. And we have to frame the syllabus. We have got the autonomy to frame the syllabus, change the syllabus to a certain extent. So I would like to know your opinion that apart from the things which you have mentioned while answering that earlier question, what will be the specific things related to IFRS which you would definitely like to include in the syllabus at an undergraduate level? Is there any specific thing which you feel that okay, we should be teaching this definitely at undergraduate level, apart from the things which you have already mentioned? Thank you.
Yeah. At an undergraduate level, it is very, very important for the student to understand that if they do not disclose the true nature of the assets and liabilities of the company, the value that will be received from the assets of the company, the timing in which the money will come back to the company. If that understanding is not clear to a common man, he is probably going to end up investing in a company which is not going to be there in a few years from now, because people who make their investments are actually investing their life savings into the company. If I invest in State Bank of India, I will get only 6%. But if I invest in ITC, I am expecting to get 16%. That is why I go and invest in ITC and not in State Bank of India. But how ITC will continue to give the 16% returns to me over a period of time? What is that Deveshwar has done in that company during his tenure for 26 years as managing director of the company? How he transformed it into a $2 billion company, how it is getting reflected in the financial statements. That understanding is important. To get that understanding, if revenue recognition is important, and if financial instruments is important, and if assets and the way provisioning is made is important, then we'll have to tell the undergrad student that, look, these are the things that will make your understanding clear, and these are the things that will help you to look at an organization. In fact, there is one university here called the Middlesex University where I conduct workshops on an annual basis. What we do is we give them the annual report of a company like Etisalat or Do or Johnson and Johnson, and then we tell the undergrad students, look at it only from the perspective of IAS 7. Nothing else has to be done. That's all. Cash flow. Look at the cash flow. Why cash flow is presented in three parts? What is the importance and significance of operating activities as opposed to investing activities and financing activities? What do you understand from this company? Make a comparison of last year and this year. And if required, look at another company in the same industry and make a intercompany comparison and come up with your findings. And these students write brilliant presentations. So the undergrad students are students who are going to graduate and come into the commercial world. Many of them come into the commercial world. Some of them go into studying their masters. What is important for them is to look at a live company. What is Amazon doing and what Flipkart is doing? Why Lenskart is successful in India? And what is their economic outlook? How do we assess it? What do we get from understanding the financial statements? How do we look at the financial statements? And then you tell them, that is why I told you these are the key standards that you should read and understand. And give them only 10 standards. Out of 41, if they study 10 or 15 standards, it's more than enough. All the 41 is not required. But it should be in the perspective of understanding what they need to know about a company. And if a SVB collapses, they should know why SVB collapsed, what is the background of it, and what is the difference between the SVB collapse and the Lehman Brothers collapse in 2008. What changed over the 15 years when a bank collapses? That kind of perspective, because these students, I find them to be extremely intelligent. I would say every student is probably 5,000% more intelligent than me. Extremely intelligent students. They don't want to be bogged down by what the standard says, but they need to understand the importance of it. Why Beju.com is struggling? What is that he is trying to do, and what is that he has done wrong, and how it is getting reflected in their financial statements? Is it right for Beju.com to recognize the revenue on day one when the student enrolled for a 6 months program? How it is violating IFRS 15? That's I feel is the level of understanding which is required at an undergrad level. I hope I
Thank you
have
so much, sir.
answered you.
Yes, sir, definitely. Thank you so much.
Anybody else with any other question? Looks like everybody is waiting for somebody to ask a question, while anybody can ask.
Sir, I'm the
Yes,
same person. Sir,
yes,
I
please.
would like to know whether you conduct any certification courses on IFRS or not, because I am not a CA. As far as I know, ICAI conducts only for the CAs, I suppose.
No,
So,
in Dubai office of ICAI, we conduct the certificate course on IFRS where both chartered accountants and non-chartered accountants attend. But the exam cannot be taken by non-chartered accountants because the certificate course on IFRS is an advanced program only meant for members of the institute. So you cannot write the exam and you cannot get a certificate, but you can attend the course. What we conduct in Dubai, we are open for both chartered accountants and non-chartered accountants. I don't know about the courses that are conducted in India, but I know about Dubai because I am a faculty at the Dubai chapter. I
sir,
don't teach in India.
how to connect to you, sir? Any
It's there
LinkedIn
in
ID?
my presentation. It's there in my presentation deck, the last slide, and the presentation deck will be shared with all of you by the organizers. And my email address is tpanand@leapexcellence.com. And the best way to reach me is always by an email, and I will respond within 24 hours because I teach in multiple institutions. So in another 1 hour's time, I have a lecture in Academic City, and then I have one more in the evening. So I teach in multiple institutions, multiple subjects. So best is to reach me through an email. tpanand@leapexcellence.com.
Thank you so much, sir. Thank you for explaining such a complicated topic in a simple and lucid language, sir. Thank you.
Thank you. My language is simple because I think in Tamil and then talk in English. I can't think in English. I'm not a native English speaker.
Hello, sir. Hello.
Yes, sir.
Yeah, if you want to get to in depth about the assets and the liabilities, like which standard you have to refer, sir?
For assets, you'll have to read IAS 16, 36, 38, 40. All the four standards have to be read together. For getting a comprehensive understanding of liabilities, I would say IAS 1 and 37, because 1 will talk about how to present it, and 37 will talk about how provisioning has to be made and how contingent liabilities and contingent assets have to be accounted for.
Okay, sir. Okay, thank you.
Yeah. All companies, wherever in the jurisdiction IFRS has been adopted, then all companies have to follow IFRS, whether you are listed or unlisted, whether you are a public company or a private company. If in that jurisdiction, for example, in Dubai, in the Middle East jurisdiction, IFRS has been adopted. So whether I have a public limited company which is listed in Dubai financial market or a private company which is called LLC in this part of the world, limited liability company, which is the equivalent of PVT Ltd in India, private limited company, IFRS has to be followed. And the first notes on accounts, the first point in notes on accounts is this set of financial statements have been prepared as per IFRS. The fact that you presented your information as per international financial reporting standards has to be explicitly stated as the first point in the notes on accounts. That's a requirement. So it's applicable to all companies in that jurisdiction. For example, in India, all the companies in India should follow the Ind AS. But Ind AS becomes mandatory for companies which are listed in the stock exchange. I hope that answers the question. So are you able to get some questions on the chat box also now? Is it activated? Okay, okay. No problem. Yeah. The present Ind AS is 90% aligned with IFRS. So what will happen is instead of Ind AS, they will start calling it as IFRS, and the IFRS which is existing will get adopted, which means all the Ind AS that is there will go. But as far as the companies, the practitioners, the auditors, the accountants are concerned, they won't have a big problem transitioning from Ind AS to IFRS, because to me, Ind AS reflects almost 90% of what is there in IFRS. In fact, there is a book written by a very eminent chartered accountant whom I respect a lot, Chinnasamy Ganesan. He is ex-KPMG. He has written a book comparing Ind AS with IFRS. Very useful book, very small book, and can be easily read and digested. And Chinnasamy Ganesan, he is an authority on IFRS in India. And he has written a very clear book, Bridging the Ind AS with IFRS. In fact, I have read that book and I find 90% alignment between IFRS and Ind AS. So it won't be a problem for India to adopt overnight.
Good afternoon, sir. This is Professor Milind from Hinduja College.
Yes, sir.
Yeah, sir. Supposing now if in India, if we are made to make it compulsory to adopt IFRS, would it be called as convergence or adoption?
What we have as Ind AS is called convergence.
Okay.
So if India completely goes into IFRS, then it will be adoption of IFRS in India. Convergence has already taken place. The convergence is what led to publication of Ind AS. We didn't have Ind AS before. We had Indian accounting standards, which is called IAS. That also is not AS, but it is Indian accounting standard. Indian accounting standard became Ind AS. Ind AS is already convergence with IFRS. That is why I said there is a 90% alignment between IFRS and Ind AS. Convergence has already taken place. It's only
So
a
now,
question of adoption.
okay, sir. Thank you so much, sir.
Thank you. Yes, please. I'm fine. Thanks, everybody. Thank you very much for the opportunity and look forward to meeting you all in the near future. Thank you so much.
Thank you so much, sir.
Thank you, sir.
Thank you, sir.
मला काय आहे डायरेक्ट एक्सपेन्सेस इनडायरेक्ट एक्सपेन्सेस ग्रुप्स दिले बनायचे तीस तुम्हाला वाउचर चेंज करायचे खाते काढायचे ती प्रोसेस प्रॅक्टिकलची आहे तेव्हा त्याने हा कोर्स प्रत्येकाला सगळाच फी मुळे आहे